Hello and welcome back to another week in the world of Angel Insights. This is a show that delves inside the world of angel investing to reveal the tips, tactics and strategies from some of the best early stage angels. And joining me today we have Gale Bowman. Now Gale is the founding director of IrishAngels, and she's grown the group to 150 investors and managed 15 investments totaling over $5.5 million in seed and Series A capital. And her previous work experience includes market research consulting at Nielsen and corporate strategy at Orbitz. She's also consulted many startups on customer research, marketing and fundraising strategies, and Bowman sits on the board of the C200 Scholars Network and is also a member of the Irish Entrepreneurs Network. So without further ado, I'm delighted to hand over to Gale Bowman, founding director of IrishAngels. Gale, it's such a pleasure to have you on the show today. Thank you so much for joining me today.
Thanks so much, Harry. I am very happy to be here.
Now, I'd love to get started today by discussing a bit about you and how you made your way into the early stage investing environment.
Sure. It was actually a little bit of luck, to be honest. So I had a background in market research consulting for new product launches with consumer packaged goods companies. That was at Nielsen. And then I also had a background at Orbitz in their strategy and analytics group. So with those pieces of my background, I really knew that I loved the technology that I encountered at Orbitz, but I also wanted to do earlier stage ventures. So I started a business on the side while I was at Orbitz, and that ultimately was a failure. But I learned a ton, and I decided to go back to business school at Chicago Booth to focus on startups. So after Chicago Booth, I had a number of very interesting startup opportunities, one of which was brought to me by some folks at Notre Dame. And these three entrepreneurs out of Notre Dame said, "Hey, Gale, we've wanted to start an angel investment network affiliated with the university for a long time, but we don't know how to do that. And we think that based on just meeting you, that you might be the right operator to do this and help us figure it out." So that was back in 2012 in the summer, right after I finished business school. And because I was willing to put some sweat equity in and figure it out with those folks that I encountered, we've been successful to date.
And talk to me, before we dive into the investing career, I'm intrigued on the operational side. What were the big takeaways for you from that experience pre-business school, building your own startup?
Building my own startup. So I did not have a revenue model, and I didn't have a clear path to a revenue model. So it effectively was a blog. It was a company called What College Forgot, and it was about all the things that we don't learn when we are in college that we need to understand to succeed in the real world. So I spent probably 2 or 3 years on the business, and it was really, really formative in terms of learning how to identify tech talent, how to write requirements from a product perspective. How do I hire a team and contractors and figure out how to get content out there? So from that perspective, I think I can now share with the entrepreneurs that I encounter what I learned from that experience, which gives me a little bit more credibility than if I hadn't tried something myself.
Mm-hmm. Absolutely. No, it does. But I do want to discuss the investment phase now of your life, because you mentioned obviously the angel network that you've built with the university friends. So talk to me in terms of, is this an individual angel style fund, or is this much more of an institutionalized VC angel style fund?
Yeah, Harry, that is a great question, because obviously the definition of an angel is an individual investor who places capital into really early companies. And a venture firm is going to be more institutionalized, where an angel group falls somewhere in the middle. And in the US, there are about 350 angel groups. And if you look across those angel groups, it really varies depending on what structure that particular group has. At IrishAngels, we have a staff of 3 people, and we are very focused on running a good process for entrepreneurs. We get them through our process pretty quickly, and we're looking for very specific types of deals that fit within the criteria that our investors are looking for. We also invest as one entity. And so while some groups will send their investors individually to place money in the company and have multiple line items on the cap table, we'll create a single purpose LLC, and we invest as one, which actually makes us much more like institutional investors than the individuals.
Mm-hmm. That makes a lot more sense. So when you have companies come to you then, as the kind of angel group that you've formed, what are the big mistakes that you see with founders approaching you for fundraising? Are there any commonalities in their mistakes?
Absolutely. So I actually teach a class at Notre Dame, and we talk about this quite a bit, because the students want to really have a lot of questions around what they can avoid. And so the big things that I see are around the founding team. Your founding team should never be too big. So a 1 or 2 person founding team tends to be best, in my opinion, based on the companies that I've seen. And actually at Irish Angels, we're never the first capital in. And so companies have always raised some money, typically from friends and family or individual angels, before they come to us. And a lot of times I see founders unintentionally creating some problems for themselves in that friends and family round by pricing or valuing their company too high before they really understand what their true market valuation should be. And so my suggestion to entrepreneurs who aren't even at the stage of needing to take on funding yet would be that when you're at that stage, use a convertible note to raise the capital instead of placing a value on the company. Another piece of advice is to make sure that you get a really good attorney, which is a tough thing to do because attorneys are expensive, and as early stage businesses, we don't have a lot of money. But getting referrals from your friends that have started businesses and work in the space is going to be critical, because you want to make sure that your founding documents, how you incorporate the business, the agreements that you have for contracts and employment agreements, et cetera, are all really well done. Because I've seen some companies, by the time they come to us, they've been working with attorneys that have steered them in a direction that wasn't that great. And they're going to need to do a lot of work to kind of rectify that situation. So it's better to start off with the right attorney up front.
Absolutely. And going to one of your points there, and that was about kind of the startups having raised capital beforehand, and you're not the first investment for them. They've got friends and family first. In terms of the bridge round, I'm always intrigued by this. I had Mike Maples on one of the shows beforehand, and he said that a bridge often isn't a bridge, it's a pier that leads to nowhere. I'm intrigued as to what you require for a bridge round in your mind to make an investable proposition, or is it just a kind of continuous funding route to nothing?
In my opinion, a bridge round that is done as a convertible note should only be used in 2 instances. So one is when you're truly too early to value the company and you're raising several $100,000 from friends and family. The only other time that we will consider a bridge note here at Irish Angels is when the company is in discussions with a VC to close a round, and they're 3 to 6 months from that, the point where they will have the capital in, and we truly bridge them from today to that financing. Now, I know that's rare, and sometimes things happen where that funding falls through, so it ends up being a little bit of a different scenario, but we don't like to see entrepreneurs raising several $1 million on convertible notes when in fact that should actually be a price round.
Mm-hmm. No, absolutely. Fair enough on the price round element. In terms of that price round element, what's your take on valuation then? Are you a fan of the Sheryl Sandberg school of thought that it's what is it? Valuation doesn't matter as long as you have a seat on the rocket ship, or are you very valuation sensitive?
Well, Harry, we are a Midwest focused group. We actually are based in Chicago, even though Notre Dame is in South Bend. So being from the Midwest, we will invest nationally, but our focus is very much on investing in companies that are going to build value through revenues. And with that, I think in our economic model, the valuations have to make sense and in my opinion, be market across the country. And that means that we will absolutely invest in Silicon Valley-based deals that have higher valuations, sometimes to the tune of 2x what we see in the Midwest. But I think that that's important as a nationally focused group that we have companies like that in our portfolio. But we also invest quite a bit here in the Midwest and elsewhere in the country where the valuations are going to be quite a bit lower. Mm-hmm. And so at the end of the day, I'm looking at the market where the company is located and based on the talent and the access to things like capital and resources in that particular environment, what is fair? And so if I get a company here in Chicago that we're looking at that wants a Silicon Valley based valuation, then we're going to pass on that company. And so it's really going to be dependent on a lot of factors within that given deal.
You said passing on the company there. I'm always intrigued, and I get a lot of angels ask me, I'm not sure how to effectively pass on a company without ruining bridges or upsetting relationships or potentially tarnishing it down the line. Do you have a formulaic structure or formula for your kind of constructive feedback relaying your no to the investment?
Harry, that's a tough question for a Monday morning, but you are right. I mean, saying no, getting to a fast no is important. Learning how to say no is critical in this business. As you know, VC it's a people business, and so we want to create really great relationships with other venture capitalists, with entrepreneurs, with others who support the ecosystems in the given markets where we play. So the way that I think about working with entrepreneurs is that we set up our process and system here such that we're going to have a conversation with an entrepreneur up front. We likely have gotten a referral to that individual. So the CEO and I have a conversation, or someone on our team has a conversation, and then we ask some quick questions. In the event that it seems to be a fit, then we're going to move them through our process pretty quickly. And as soon as we get to a point where it's not going to be a fit, then we'll give them one of two responses. One would be, this is probably not going to be a fit for our group, and we'll try to share with them why. And then I'll also give some advice on other sources of capital that they might consider, whether that's debt, friends and family, or sometimes something like a family office that might be a little bit more alternative than a traditional VC. Mm-hmm. If they could be a fit in the future, we share with them a lot of times about the timing of when they approach groups like us or venture capital firms. So with angel groups, we have 160 investors at IrishAngels, and we meet quarterly here in Chicago, such that we can see 3 deals each time that have gone through our process that have a really high chance of getting funding from the group. But what I've learned is that our investors want to see a specific type of company at a given stage that makes sense for our economic model. And as a result, I will consult with entrepreneurs about the timing of when they come in and if they are too early. But I truly think that if they take some individual angel money or some other capital right now and come back to us for the next round, that it could be a really great fit. And we'll kind of talk through that. And I've also offered several of those entrepreneurs to help where we can in the interim.
Absolutely. No, that's a phenomenal way to keep the relationship going. I'm intrigued as to hear your thoughts on, you said about working for your unit, your economics, sorry. Yes. And in terms of the exit returns then, what are your kind of exit returns, and how do you think that differs then from potentially later stage, much more institutional growth stage even investors?
Yes. So with angel investment, obviously nirvana for us would be the last capital into a deal, but we know that that's not going to happen. And so we're looking for companies today that are raising $1 to $3 million. These companies tend to come to us having already raised several $100,000, sometimes even up to $1 million. And we know that they're going to need to take on several million more dollars at least, if not $5 to $10 million in the future, in order to get to a point of scale where they can exit. So what we're doing is saying, all right, based on the amount they're raising today and the valuation today, how much capital that they are going to need to raise in subsequent rounds, and what we think the exit multiple and revenues would be, we're going to try and figure out what that return on our capital is today from a cash-on-cash perspective. And, our goal is to find deals where we have a 10x cash-on-cash return, which is going to be a little bit different than potentially some VCs who are hoping to have 1 or 2 really huge wins, whereas we want a lot of doubles and hopefully some triples and maybe even a home run in our portfolio. But based on what we've seen to date, these companies that are raising the 1 to 3 and they come to us with several $100,000 of trailing 12 months revenues on average, we think they'll need to raise a little bit more capital in the future. And then we're hoping for, a good but not a huge return. And so with that, with some of them returning 10x cash-on-cash return, we're hoping to get to the average of angel investment returns in the U.S., which per the Angel Capital Association is 2.5 times.
I'm intrigued that you said about the nirvana being the last money into the round, and absolutely that is. In terms of dilution, it's often a common problem angels cite to me. How do you guys approach dilution and attempt to potentially mitigate it?
Yeah, that's a really tough one. There are probably 2 answers. One is being laser focused on the type or the stage of deals that we're looking at. And so while we have one of our 60 angel investors tells me, Gale, I really want to find a deal to invest in where it's such an outsized return, I can get my private jet. And this is kind of a joke that he and I have. And so honestly, I told him the other day, I said, Charlie, I don't know that this is going to happen because if you think about the types of deals we're looking at with IrishAngels and that our members want to invest in, it's probably not going to happen that we'll find the next Uber or Airbnb based on our approach. And so being focused on the types of deals that make sense for us and not jumping on the bandwagon anytime some other VCs in our network are excited about a deal, I think is one of the most important things that we can do, because those companies are going to need a lot of additional capital, which leads to dilution. The second thing that we want to make sure we do right up front is to invest in entrepreneurs that we truly believe have the ability to execute at the stage of business that they're at now. And then if they do need to raise capital, they can achieve that. And if at some point they need to step out as the CEO, that's also something that we make sure to talk with entrepreneurs about, because our goal is to ensure that we're aligned with entrepreneurs in terms of being able to move towards an exit and to scale the business in a way that would be in the best interest of both the company and the VC. So ensuring, once again, that we're just transparent and finding the right entrepreneurs up front is actually going to be key in preventing that additional dilution that happens when the wrong team is in place.
And I'd love to dive into a quick fire round with you now. So I say a short statement and then you give me your immediate thoughts. How does that sound?
That sounds beautiful.
Okay, so let's start with your favorite investing resource. This could be a book, it could be a blog, it could be a newsletter. What are your favorites?
Sure. From a newsletter blog perspective, I like Mattermark. I like the data and the insights around both PitchBook and CB Insights, I think, are pretty good. I typically try to read the term sheet. And then also, if I've got specific questions on venture capital, I like to go to Quora.
In terms of then the biggest challenge for you in running Irish Angels?
Honestly, it's been really fun to invest in. It's been a startup and it still is. And I'm trying to figure out how do we scale this and what's our next step, and strategically, how do we put Irish Angels on the map as being a really great thing for the Notre Dame entrepreneurial ecosystem, as well as just the national and Chicago-based VC ecosystems. And as a true entrepreneur, I think that the answer here has to be time. I wish I had so much more time to do additional things. And so VC, in my opinion, it's really an exercise in figuring out what has the biggest bang for my buck in terms of how I'm going to spend my time in helping our portfolio companies and sourcing new deals and developing networks and learning and giving back. I think there's all of these things that I struggle to balance sometimes. But, at the end of the day, I love what we do. And so I just kind of go forward, and we have a great team in place now, which makes it a lot of fun.
And then let's finish, say, on your most recent investment with Irish Angels and why you said yes.
Okay, I've got two, which I think I'll share both, because we actually will look at a lot of industries at Irish Angels. About 2/3 of our portfolio is business-to-business technology, and then the remaining third is split pretty evenly among consumer tech, consumer products, and medical. So in the last couple of months, one medical company that we invested in is called Catalyst Orthoscience. It is a total shoulder surgery system that if you have to get a shoulder replacement, right now they're drilling out a lot of bone in order to put a metal rod into your arm. And so this approach actually requires much less bone removal, which improves your chance of success with the surgery and reduces the amount of recovery time. We invested right after they got 510(k) clearance from the FDA. And so it's really a fun time for the company. They're just now starting to sell, and surgeons are just starting to do the first surgeries. So I really hope that goes well, because I think it'll really help a lot of people who have to face those types of joint replacements. And then the other one is called Shot Tracker. So this one was recently featured in TechCrunch, and it is an entrepreneur by the name of Davian Ross, based out of Kansas City, has started a real-time sports analytics business. And so imagine you've got a sensor in the basketball, you've got a sensor in the net, in the gym, and then a player would have it in his or her shoe. So it's a really cool way to, in real time, understand which lineups work well. And if someone like Steph Curry is shooting the ball, you can immediately tell from where on the floor is his shooting percentage the highest. And you can make real time changes based on that. And it's actually focused, obviously, initially on basketball, both at the NBA and the amateur levels. And the team there does want to expand to other sports, which is really exciting.
Well, Gale, it's been such a pleasure to have you on the show today and hear more about Irish Angels. I look very forward to seeing it develop in the future. And thank you so much for coming on the show today.
Awesome. Thanks so much, Harry. Take care.
And I want to say a huge thanks to Gale for giving up her time today to be on the show. Absolutely incredible to hear her journey with Irish Angels. And if you enjoyed the show today and want to see more from Syndicate Room, then you can head over to syndicateroom.com, where you can find a whole load more articles, resources, and podcast episodes, all on the angel investing journey. As always, we so appreciate all your support and look very forward to bringing you next week's episode.